Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Ed Rosenberg, who's head of ETF Capital Markets and Analytics, correct?
Yes.
At FlexShares, a Northern Trust company?
Yes.
So listen, you guys are great because although you could talk products and you've got a wonderful suite of products, what sets you folks apart is you really reach out to advisors and try to help them from an educational standpoint in many ways. And today we're going to talk about liquidity and trading, kind of best practices.
Okay.
And I know you've got a lot of ideas in that area.
I do.
So what would you say would be your biggest hot buttons?
So what I would say is everyone puts a lot of time into researching an ETF,
Yeah.
which one to buy. There's a ton of them out there. And you can say, you spend a lot of time deciphering what's the best one for a specific strategy. What a lot of people don't put a lot of time into is, okay, now I want to go buy that or execute on that plan. And what's important about that is you picked a strategy for a very specific reason. It might offer a certain alpha over something else, or it does something. But when you go to execute it, you just put the trade in and see what happens. And in reality, by doing that well, it can help you with your returns in the long run. It is a cost that you can help reduce. And the best part about it is people are going to say, oh, it only works if the ETF has a low on-screen volume or perceived low trading volume. It's not the case. It doesn't matter if the ETF trades 1 million shares a day or 1,000 shares a day. You need to have an idea of what makes the best plan for you to execute that when you're going into it.
So give me some examples. If you just say you just put the trade in, meaning you just put in a market order and then leave it. Right?
Yeah, so think about it. If you want to execute 5,000 shares of security ABC, whatever that is, and you look at the screen and you go, oh, it's trading at a 1 cent spread. Let me just put a market order in. And all of a sudden it comes back filled and you move that price 4 cents. Mm-hmm. To me, that's probably not the best way to execute it.
Right.
If you had done it a different way, let's start off by most custodians, most trading firms, any firm you trade through have an expert desk at this. They have a block desk you can call and leverage. Mm-hmm. They can provide trading strategies of how you should execute this. And that could be whether the security trades 1 million shares or 1,000 shares again. You want to leverage that because maybe you could have only moved the price 1 cent. Maybe you wouldn't move it at all. There's a lot of different things you could do. And what I'll say by that is maybe you could have put a limit order in, something as basic as that, as opposed to any other complicated strategy. If you just thought about it and put a limit order in, it could make the experience much better.
Do you think as advisors we're not taking full advantage of not only what our platform or broker-dealers have to offer, but also the help from providers like you?
Absolutely.
Yeah.
And we have to think of it in terms of everybody's used to trading something, right? Everyone's bought an individual security. That's somewhere along the lines. But an individual security and an ETF are extremely different things, right? Individual securities are driven by supply and demand. ETFs have an intrinsic value to them. They have all those underlying securities. So the price can only go so far. People refer to that as an arbitrage bound. That should be the starting point of the understanding, and then leveraging all these resources you have. You have ETF sponsors like us who are more than willing to explain these strategies, give you an understanding of it. As I said earlier, every firm has a trading desk. And also, depending on the firm, you might be able to reach out to a liquidity provider who can give you other options that we might not even know that is at their disposal.
Yeah, and that's a whole other market that's booming, and hopefully we'll continue to educate in those areas. And to your point, the whole benefit, or one of the huge benefits of ETFs, is the huge economic benefit of the low expenses. But you might as well just throw that out the window if you're not trading efficiently, right?
Correct. I wouldn't say throw it entirely out the window.
Right.
What I would say is you pick this vehicle for a specific reason and you want to maximize how you use it, right? Having an investment strategy is one thing, but having a trading strategy adds to your ability to maximize why you picked this ETF in the first place. I mean, let's face it, nobody wants to give away a return on either side, whether you're buying or selling. And putting in a little bit of time, just understanding how they work and understanding how the underlying should work will really help you go far in really creating effective trading strategies and maximizing that return.
Great points, Ed. Thanks for being with us today.
Thank you
really appreciate it.
Thank you for having me. I appreciate being here.